Coin traders, how we doing? What's going on? Thanks for joining me for another show looking at Internet Computer ICP on that ticker, not to be confused with the Awesome Insane Clown Posse. But anyway, the ICP computer. Now, I do actually want to start off talking about a post made by X2 World Tech or at Robbed Crypto over on Twitter or X or whatever you want to call it. Basically talking about how everything on Internet Computer is actually stored on the blockchain itself. So now what does this mean? Well, kind of what this essentially means is that when you think of things like NFTs or whatnot, a lot of those aren't actually stored on the blockchain directly itself. They're actually stored externally, and then the blockchain stores the references to those things. So now what this means in the sense of Internet computers, all those items are actually stored. Now, because we're actually using Internet Computer as a decentralized internet or a cloud, so to speak, not only are we actually using the storage capabilities, but we actually have the decentralized computing power as well, which is the whole main idea behind Internet Computer. So a great post again. And kind of my follow-up to this was basically that a lot of people don't really understand blockchain in general at all, so they don't really understand how important this is. So hopefully this can just highlight the amazing possibilities and capabilities for Internet Computer. And so yeah, if you do want to stay updated on different types of threads and discussions, make sure to drop me a follow over on Twitter or X at coin_trades is the handle. So now let's go ahead and talk about this chart. Well, the first thing I do want to do before talking about the recent price action is actually talking about what a wonderful support and defense of this price line for the daily close we actually saw maintained. So looking at effectively 290, and essentially we had days and days and days of seeing prices test this level, yet the bulls were overall defending this level as closing support. So we know extreme strength is coming in defense of this level. So if we actually look at when we saw our first initial test back on 13th of September to when we actually saw our upside. So 2 weeks, 2 solid weeks of actual test rejection and growth. Now we did see a lower low at 282.5 for Internet Computer. So unfortunately did see that, but because we did see a maintaining of the closing level of support, still a good sign, especially now seeing higher highs and especially coming in on top of a pretty big resistance zone, both in terms of a close as well as price level supports, previous supports, excuse me, anyway. So now previous support, if we look left, previous support. So didn't really get too much resistance of this level up overhead. So if we are looking at just below 320 up to 323.5, but obviously easy come, easy go, and we did see a complete slippage of that level. Now, since we're talking about this 2-week accumulation period where we did establish the bottom, the good thing here is that we actually did establish a big resistance point as well, which if you can guess clearly is now a big support point that we are still looking to hold. Similarly to that is also these exponential moving averages, specifically the 12 and the 26 on this daily. Now you can see we are getting stuck up at the 50, just like we did get multiple times back here on our run right around the $4 level. So the fact that now seeing that as a big resistance point is to be expected, but now especially looking at a resistance point, previous resistance point flipping, and that's right at the 303 level. So again, looking at these exponential moving averages, so if I turn off the 50 here, what we're looking at looking left is big points of resistance and resistance before this flush below the $4 level. Ever since then have maintained these points as big resistance. So resistance saw test this level of support again. Small little rally and oversold bounce, rejecting off the 12 once again, rejection off the 12, off the 12, off the 12, and then finally breaking it and above also the 26. So now still looking to, on the current daily candle, maintain support not only on top of this 12, but ideally on top of the 26 as well, just like we did on the candle yesterday. But at a worst, still looking to maintain closing support on top of this 12-period exponential moving average. So as long as we can maintain support on top of the 12-period EMA as well as this 303 price level, that's a perfect line to be able to maintain a higher low and basically establish a little bit of an opportunity to knock out now this next price high and see the longer term trend carrying on to the upside. But if we actually do lose both the 12 and the 303 price level and slip back below the $3 psychological mark, that is going to be a pretty bad sign for Internet Computer, since pretty much now we are going to establish these levels as resistance once again. And that will put extra stress and sell pressure on this 290 longer term closing support, which honestly, if we actually see this kind of move and rally to the upside and we actually don't maintain a higher low on top of the previous level of support for the close at 290, if we do retrace this level to test 290 again, that's going to be a pretty high likelihood of actually being able to break that level this time. Since typically we're not going to establish it as a 2-week line of support, find a rally now to see all of this upside, just to not be able to maintain a defense in a higher low. So if we do actually retrace and see another revisit and retest of 290, that will be a sign that'll have me a lot more worried and nervous than this whole 2-week accumulation period. So hopefully that concept does make sense. If it doesn't, definitely drop me a note in the comments sections below. But just know that the strength has come from defending 2 weeks on top of this level and seeing upside. But if we can't get a defense and a support higher than what we actually experienced previously, that's what does make that a actual bad sign. And the next retest, especially after being able to hold all this, is pretty much going to confirm that there's not going to be enough buy pressure at that level, since it hasn't able to maintain higher than that, especially after this nice 4-day upside move. For price levels up overhead, though, if we do actually start to see higher highs, we're going to be looking right at the 340 line, which looking left, big point of closing support, as well as big point of resistance, which also aligned with this 12-period exponential moving average. So plenty of resistance now up overhead if, in fact, we do hold on top of 303, as well as this 12-period exponential moving average at 3094. The good news, though, is that despite this big body on this candle, we're actually looking at a lot of these lower shadows in support and defense of that. So as long as we can continue to see a lot of buying power closing on top of making these shadows, that is going to be one of those good signs to let us know that buying pressure is stepping in and selling pressure is starting to subside, because that is, in fact, what does create these downside shadows. Now flipping over here into the 4-day chart, and if you have been following the last few videos, we have been liking the 4-day chart a little bit more because there's been a lot of signs and signals on it that have been extremely apparent and also relevant to the current chart setup. So one of the most significant things right now is just the resistance of this 12-period EMA on this chart for the 4-day, because as we see before, we broke the $4 level, big point of closing resistance for this 4-day, finally broke, and now we are starting to see big resistance once again and tests that do come in and reject right at that 12-period EMA. Now, in addition to that, let's go ahead and turn on volume and talk about that as well, because the last few bullish candles actually haven't been that significant, and we have seen decrease in volume overall as a whole. But if we specifically look at, let's go ahead and zoom in here, these last 2 bullish candles, you can see that the volume is actually some of the most minimal that we have seen in a while, and despite being 2 bars of increasing bullish volume, it's still not enough compared to the bearish bar that we actually saw close yesterday, or about 4 hours ago. So now with almost 4 days left to go on the current candle, plenty of things to happen. But the level for this 12-period EMA right now is at 323, which if we actually go ahead and draw a price level right there and retrace and look left, you can see that that's a big point of closing support for this 4-day candle, or this 4-day chart. So we know that between being previous level of closing resistance as well as a very resistive exponential moving average, this 323 is going to be strong up overhead resistance as well. And especially without any sort of significant bullish volume coming in, we're pretty much just going to be relying on the bears not to show up in that full force to push down and actually make a lower high, or a lower low, excuse me. We actually pull up the MACD for the 4-day chart right now. You can see that we did just have our nice bullish cross. Histogram bars are trending back to the 0 line, and now we're getting our first green histogram bar. So zooming out, you can just see how far down in terms of where we actually were, obviously not counting the initial sell-off. So hopefully this could be a little bit of a good sign that we're going to start to trend back to the upside and back up above the 0 line. But obviously we could just as easily reject, just like we did back in July to the middle of August. So we could actually end up seeing MACD cross and actually heading lower. I don't personally think that's the most likely scenario right now. But either way, with a nice bullish cross on this 4-day MACD, it's a little bit of a good sign that we are going to start to trend and head back up to test a lot of those moving averages. All right, so let's go ahead and talk about this weekly chart now, because a lot's actually going on with the weekly as well. And kind of like the 4-day, very big resistance apparent on the 12-period exponential moving average that we actually haven't seen as a test since basically the middle of July. But right now, we actually did have the weekly candle close pretty nicely for the bulls. And the reason I say that is that if we actually look at the magnitude of the body here and look left, we actually engulf 3 bearish candles. So it took 1 week for the bulls to actually knock out 3 weeks of upside, or downside, excuse me. And that's combined with the fact that we actually saw the biggest amount of bearish weekly volume coming in. And although if we actually zoom out, you can see that with respect to ICP, it's actually not that much volume recently for any type of trading. But just the fact that we actually saw for volume 3.3 million compared to the weekly that closed at 1.459 million, we actually know now that buying pressure is going to start to take over, or at least going to put a halt to substantial sell pressure, since we've already seen peak sell pressure right now that we actually knocked out with one candle what took 3 weeks for the bears. So now in a perfect setup, we would actually maintain the support level for this previous bearish bar for the close, or the open rather. So the current candle will need to close on top of 291, because what we'd love to see is the current bearish bar actually fit inside of the previous bullish bar. If that happens, that'll be a little bit more optimism for the bulls to actually see a little bit follow through in a green follow on week next week. But again, it's entirely possible to see a little lower shadow and actually see a follow on. But as long as the next week or two actually fit inside of the bullish week that we saw just close, that's what's really going to help to change the trend in favor of bullish upside. Because if we actually see the current or the follow on week actually close below 291, that's going to really invalidate this bullish candle as being any sort of reversal signal. So looking at this 12-hour chart really quick before we wrap up, you can see how big resistance this line for exponential moving averages were until recently when we finally broke it. Saw a lot of nice bullish volume coming in here on this 12 hours, especially being able to maintain so far this 26-period exponential moving average on this 12-hour chart. So as long as we can maintain prices on top of this 26-period exponential moving average, and especially seeing a lot of these long lower shadows on these candles, that is still a very good sign. But again, losing it would be a pretty bad sign, because this should be a little bit more supportive, especially after being so resisted for all this time. Now I want to actually go ahead and turn volume off and talk about the RSI Relative Strength Index, because on this 12-hour chart, we actually ran up to barely in the overbought level. So we're looking at an RSI that closed at 70.5. So if we actually zoom out here, you can see that the last time that we actually got overbought on this 12-hour chart anyway, it was back in April of 23, and obviously being pretty far extended above it. But you can see every time that we were basically above the 70 line, pretty quick retracement, and a substantial retracement at that. So we could end up seeing this RSI on the current actually retracing back down to about the 40 line, which seems to be where a lot of this RSI for the 12-hour does find a little bit more of support, especially after being overbought. If that does turn out to be the case, then we're pretty much looking at losing exponential moving average support and testing the 303 previous resistance, should be now support line. So yeah, I think really the thing right now for Internet Computer is just being able to maintain a zone of support on top of this 12 period or 26 period on this 12-hour chart exponential moving average, and on top of 303, but definitely above the $3 psychological. I think this is going to be a very big zone that hopefully the bulls will have no problem defending. But like we said, if we do ultimately end up breaking back down below the $3 psychological level, that's pretty much going to be a bad and surefire sign that we are going to be testing 290, and then another retracement and back test of 290 again is going to be a lot more likely to actually end up breaking that and seeing it farther downside. But anyway, yeah, I would love to know everyone's thoughts, predictions, and issues and all that stuff down in the comment sections below. Do love getting back to each and every one of you. That is going to wrap it up for the show today, though. Hope you all enjoyed. If you did, please hit the thumbs up, like, and subscribe if you have not done so just yet. And don't forget to drop me a follow over on Twitter or X at @coin_trades is the handle over there. All right, well, thanks once again. That's going to do it. Stay safe, everyone, and I will catch you back in the next video.